Good morning, good afternoon, and good evening, everyone. Thank you for joining this, the second in ACI World's virtual press briefing series exploring the economic impact of COVID-19 on the airport sector and the path to recovery. My name is David Whiteley. I'm ACI World's Vice President for Marketing and Communications, and I'm joined today by our Director General Felipe Oliveira and Vice President for Economics Patrick Lucas. Today's webinar will examine the continuing economic impact of the pandemic and look at prospects for global recovery of the airport sector. Key findings will also be presented from ACI's new publications, the Long-Term Carbon Goal Study, which set a net zero carbon target for the world's airports, and the Global Outlook of Airport Capital Expenditure, meeting sustainable development goals in the future of air travel demand. These studies are well-timed and prescient. As the industry navigates the continuing crisis, investment in airport infrastructure will be needed more than ever to accelerate recovery and stimulate economies. These investments must also strike a balance between a growing air transport sector with commitments to decarbonize the industry in support of the United Nations Sustainable Development Goals and other international targets. Felipe and Patrick will present ACI World's latest findings and will then open the floor for questions. If you'd like to put a question to the panel, please send it to us through the chat function and we'll address as many of your questions as we can. So without further ado, I'll ask Felipe to lead us off with an introduction.
Hello, and thank you, David, and good morning, good afternoon, good evening, depends where you are in the world. And hello, everyone, and thank you again for joining us for our second COVID-19 Economic Impact Analysis and Path of Recovery press conference. As the data and analysis we will review today shows that we continue to make a positive incremental steps towards rebuilding global connectivity and returning the aviation to the pathway of growth, and we collectively established before the COVID-19 pandemic. This is crucial for the global economy and the communities we serve, as the air transport industry is responsible for around 9% of the global GDP, with the catalytic effect that airlines, airports, and other players of the industry produce. I'm currently in Europe, traveling between Athens, Rome, and Geneva, in some business meetings as well, enjoying some quality time off with my family. Months of isolation have forced us to be creative in how we maintain our social and business connections, and we are able to shift online meetings thanks to Zooms and Teams. However, is no denying the value and effectiveness of the face-to-face meetings. I must admit that it's really nice to finally be back on the road again, to be able to reconnect with friends, colleagues, over a delicious meal or enjoying a nice glass of wine with a real toast. We are definitely reaching a tipping point in the COVID-19 pandemic, a crossroads where optimism for a sustained recovery has met the reticence of the governments to take the risk-based but proactive approach to easing travel restrictions and lockdowns. Despite of this increasing of positive signs, COVID-19 remains an existential crisis for airports, airlines, and their commercial partners. In aviation, it still needs support and reasonable policy decisions from governments if an even sustained recovery is to be realized. The lack of coordination among the governments remains one of our biggest concerns. It has been very difficult to sustain an industry restart with an coordinated approach, which in turn will continue to affect passengers' confidence, and passengers will only be willing to travel if the rules are clear and harmonized across different countries. Just as important as this coordination from the governments, our partnerships within the aviation. Our industry has always been an interconnected and interdependent ecosystem, and recovery will require weighted levels of collaboration and partnership among industry and stakeholders. It's clear to me that during the crisis, the collaborative approach among all participants in the aviation ecosystem has increased. Airports has supported the industry with waivers in parking fees, increasing the credit terms for airlines, and supporting the airline community with various measures. In addition, airports, despite of lack of movements, maintain their operations receiving repatriation flights, cargo flights with goods, medicines, and medical equipment to help to cope with the pandemic, and most recently, supporting the transport of the vaccines. Most airports in the world are providing incentives to airlines for the comeback of the operations, as without passengers, airports will not return to a financial health. There is no one-size-fits-all approach that will satisfy all the players in aviation, but we remain ready and willing to work with the airlines, air navigation providers, and all our partners on solutions that benefit us all, and most importantly, the passengers. As we work together, we must also ensure that we do not lose sight of a bigger picture, the long-term goal of achieving net zero carbon emissions no later than 2050. New and improved airport infrastructure will be a key to continue the development of air transport beyond the recovery from the COVID-19 pandemic. Sustainable long-term growth for the industry, which need increased airport capital investment, reasonable policies for the use of these lots, and developments improving the economic, social, and environmental footprint of airports. ACI World has recently published 2 studies: the Global Outlook of Airport Capital Expenditure, Meeting Sustainable Development Goals and Future Air Travel Demand, and the ACI Long-Term Carbon Goal for the world's airports. These studies explore how the airport industry current financial shortfall poses significant challenges to the modernizing of infrastructure and the long-term target in net zero operations by 2050. We will need governments to work with airports in supporting and incentivizing recovery to mitigate the risks of falling short on the sustainable long-term growth for the industry. This is a huge challenge, but I believe ACI role is a key influencer and driver of the change in our industry. We know that global collaboration between us and other representatives of the aviation ecosystem, especially with ICAO, IATA, and other valued global partners, will be essential to the industry to successfully sustain a balanced recovery and beyond. We want to work with all our partners to support the industry, and this will be a key element for our success. We are stronger together, and airlines and airports have to play a key cooperative role in recovery and the long-term development of the industry. Thank you very much.
Thanks, Felipe. Good to hear more detail on the short-term, medium-term, and long-term challenges of the industry. And also good to hear that you're one of the people that's reconnecting the world right now as we set out on this recovery. Now I'll ask ACI World's Director of Economics, Patrick Lucas, to take us through some of the detail of the economic impact analysis, the recovery pathway, and also the 2 studies that we mentioned. So over to you, Patrick.
Great, thank you, David. Good day, everyone. It's great to engage with all of you and present some of the latest industry data and insights. I'd like to give you just a short roadmap of the presentation. The presentation is intended to spark discussion and some questions from you. I will cover the immediate impacts of the pandemic in 2020 and then also look at 2021. I will then analyze kind of these pathways to industry recovery, highlighting both the upside potential as well as some of the downside risks. I will also take this longer-term view, as Felipe mentioned, beyond the near term to address both the industry challenges, but also the opportunities related to infrastructure development, sustainability, and environmental goals, drawing on these recent high-profile studies that have just been released. Now, it's been more than 15 months since the World Health Organization has declared the COVID-19 outbreak a global pandemic. I mean, of course, since then, daily life across the globe has changed along with the human tragedy. The crisis has also resulted in this dramatic impact, of course, on the economy, trade, mobility. Practically every aspect of economic and social activity were and still are disrupted. Now, the latest COVID-19 variant, Delta, is of course the most contagious yet, up to 60% more transmissible than other variants. And this poses a challenge in terms of a swift recovery in some markets. However, and this is something that needs to be stressed, current vaccines are effective against it for those segments of the population who have the full dosage of protection. And this point is very important in the context of travel restrictions and government policy going forward. Now, if we take a retrospective look at airport passenger traffic on this chart, the previous downturns over the last decades pale in comparison to the impact of the pandemic. They appear as slight little cracks in the road, whereas the current crisis resembles this cliff of unprecedented proportions. Now, unfortunately, passenger traffic, the decline in 2020 has literally brought us back to traffic levels from over 2 decades ago, before 1997. Now, fortunately, aviation is resilient. We are in the business of connecting people, businesses, and culture. This need will prevail. While we will get back to 2019 levels in a couple of years, it could take as much as 20 years or more to get back to the original trend. So that is what was forecasted before the pandemic, the green line. Now, I'd like to drill down and kind of magnify the impact in 2020 and 2021 on a quarterly basis, and so that you could see the path to recovery in the second half of the year. Now, the crisis had removed almost 6 billion passengers by the end of 2020 compared to the projected baseline. Again, this is the pre-COVID-19 forecast for 2020. So what you see there is the green line. And this represents a decline of 62% in terms of global passenger traffic. In terms of lost revenues, this represents a decline of 129 billion USD in 2020. Now, the lasting adverse impact of the crisis is forecasted to remove an additional 5 billion passengers by the end of 2021. Here again, representing a decline of 51%. So yes, there is this improvement, but still a decline. There is this downside risk, which is represented by the shaded red area under the dotted red line. And I will present some of these scenarios in the upcoming slides. But the WHO and many country leaders are raising these concerns over a two-track pandemic, favoring wealthier nations as vaccinations in poorer countries lag. So the group of 20 finance ministers have stated in a communique, and here I quote, new variants of the coronavirus and an uneven pace of vaccination could undermine a brightening outlook for the world economy. So in other words, a vaccine divide could inevitably lead to an air travel divide, which threatens the benefits of aviation in some key emerging markets in particular. Now, it's always useful to get a sense of the airport business and the core revenue channels. Here, I'm showing you 2019 data because 2020 is obviously completely distorted globally, and this is based on over 900 commercial airports that we survey annually. 54% of revenues come from what is called aeronautical sources, which is basically the darker blue portion of the donut chart on the left-hand side. This is made up of passenger charges, which account for the largest share of aeronautical revenues, followed by charges levied on airlines related to landing, parking, and other fees. Non-aeronautical revenue makes up about 40%. So this is the lighter blue. And this is made up of the retail concessions, duty-free, car parking, rent, and so on. Now, over 70% of revenues are linked to passenger transactions here, okay? On the right side, you can see the distribution for Asia Pacific and the Middle East, which have a higher proportion of revenues coming from non-aeronautical sources. So in fact, many hubs with higher passenger volumes actually have a majority share of revenues coming from commercial non-aeronautical revenues. Now, revenues are tightly, as I mentioned, tightly correlated to traffic. So on both the aeronautical and non-aeronautical revenue streams, the foot traffic is fundamental. Now, the challenge or the tragedy of our business is that airports remain a capital-intensive business. Like other infrastructure-intensive businesses, this means that there are high fixed costs with relatively highly leveraged debt levels, right? At least 35% of costs are fixed, and many operating expenses also remain semi-fixed. So even with low traffic levels, there are certain services and utilities that need to be put in place to guarantee the safety of passengers, but also for cargo operations. Now, while creditors have been very accommodating, given the fact that travel restrictions are imposed exogenously, I mean, there is this new risk paradigm that is arising, and this has an impact on the financing costs or the cost of capital, and will have implications on the airport cost base going forward. Now, that's the bad news. What about the good news? I think it's important to emphasize that the intrinsic demand, or based on the underlying fundamentals of income and prices, are not depressed. Governments, and we have to credit governments on this regarding the income, have been quick to respond in 2020 with fiscal stimulus and wage support schemes in major markets. So people have money in their pockets, there is confidence in vaccines, and there is this, what has been coined vacation deprivation. So this is a formula for a potential boom. People, as I mentioned, need to connect again and experience the world around them. Ultimately, we are in the business of connecting people. So on this chart, and this is not our data, but the OECD data, you have the OECD countries, and it's the Consumer Confidence Index, which basically encompass almost 40 countries, many of which are the higher income countries. So we could see the strengthened consumer outlook. This obviously has important impact on air transport demand and, of course, the propensity to travel. Now, that said, and if we look at this from a market segmentation point of view, international restrictions are, of course, leading to the dichotomy in terms of market segments. International travel remains suppressed, with declines of 84% in the spring months as compared to 2019. Now, in these charts, you can see the latest 2021 data, so the blue line, globally in comparison to 2020 and 2019. So 2020 is the red lines, and 2019 is the gray line. So you could see that on a relative scale. Now, on the other hand, domestic markets continue to show a strong bounce back. Domestic markets are down, but not down as much at 34%. As compared to 2019. So as I mentioned, some markets, we do see this form of vaccine optimism and what has been coined as vacation deprivation in the media. There is this pent-up demand, and there is this appetite for travel. Now, it's important to note that some very sizable domestic markets have reached full recovery, such as China and Russia, in terms of domestic traffic. And this you can see on the right-hand side of your screen. We also see huge domestic markets like the US also accelerating on the domestic front, week after week, approaching 2019 levels. And this is even independent of the country's international traffic. Now, many of our forecasts over the short term, which then feed into the medium term over the next 5 years, hinge on the effectiveness of vaccines. It also considers the supply chain to deploy the vaccinations to a significant proportion of the population, to develop herd immunity, as well as the containment of these variant viruses. Now, we will see the biggest uptick as a result of pent-up demand and vaccine rollout in H2, so the second half of 2021. By the end of 2021, we're expecting to be in the 45 to 55% range of 2019 levels, between the red and yellow lines, so to speak. Again, there is this pent-up demand. People do have the accumulated savings and would travel if they could. So there is this strong possibility we get back even above and beyond the red line after 2021, after restrictions are lifted or certain travel corridors are established on some major international markets. Now, the low or more pessimistic scenario, so this is the yellow line, assumes a slower recovery due to variants and a slower vaccine rollout. Now, if we look at the baseline scenario, the red line, which assumes that a good proportion of the vaccines will be rolled out in 2021 in major markets, traffic is expected to get back, overall traffic, to 2019 levels by the end of 2023. International markets will take longer, and if we look at the bottom left-hand chart, we expect traffic levels to get back by 2024 based on the baseline. Of course, there are certain markets like Europe, which is heavily dependent on international traffic and transfer passengers. It may take even longer than this. Now, looking beyond the short term and medium term, it's very important to remind us all of these longer term fundamentals, and these longer term fundamentals still apply here, okay? Because getting back to 2019 levels will mean basically a world with infrastructure and capacity constraints. So we need to be cognizant of the demography of aviation. Many markets have seen aviation open up over the last decades, and we also saw the propensity to travel rise quickly with the rises in income. Interestingly, 80% of the world's population resides in emerging markets and developing economies. If we look at these 4 markets alone, so China, India, Indonesia, and Vietnam, with huge domestic aviation markets and even latent demand, this represents about 40% of the world's population. So our longer-term forecasts are very much based on the underlying fundamentals of the future cost of travel, but also the demography of aviation with its interrelationship to income levels, which have the greatest weighting. Now, many countries have just peaked or will peak in the years to come in terms of working age population. So this is the population aged between 15 and 65 years. And a larger working age population translates into a higher propensity to travel. And here on the right-hand side, we have 2 examples. Brazil, which has just peaked actually in 2021, and India, which will peak in the years to come in 2040. Now, you may ask, what about the mature markets of Europe and North America? Well, they will benefit as well. There will also be these important feedback loops as a result of international traffic growth originating from these emerging markets. Now, what are some of the implications here with respect to infrastructure or the CapEx required for longer-term demand? Well, as mentioned, we just released a study called the Global Outlook for Airport Capital Expenditure, and this was done with the support of Hamad International Airport and developed in collaboration with Oxford Economics. While there was this estimated decline in an estimated decline of 33% in capital spending as a result of the pandemic, or call it CapEx deferment, CapEx is expected to bounce back. But we're not where we should have been, so to speak, right? Overall, the global net decline in CapEx was less pronounced, but it is very heterogeneous from one region to the next. Some markets like the US, thanks to the CARES Act, and they pushed for some pump priming into infrastructure, did not experience a decline per se. Certain Asian markets remain relatively stable too. However, European markets suffered some of the biggest setbacks in capital spending due to the major financial shortfalls. Now, between 2021 and 2040, projections indicate approximately 2.4 trillion in airport total capital investments will be needed to close the longer-term infrastructure gap to meet demand. And this is comparable to the GDP of some G7 countries like Italy, for instance. Now, of this amount, Asia Pacific comprises about 54% of the needed capital investments. And this reflects the region's rapid passenger growth historically and in future years. And also the need to develop new greenfield airports, as well as to modernize and expand existing airport infrastructure, or the brownfield component. Now, even with the crisis and the expected recovery to 2019 levels in several years, traffic is still expected to double by 2040, if we think of this in terms of unconstrained demand or potential demand. However, failure to close the infrastructure gap does have real socioeconomic consequences, which are very much linked to the Sustainable Development Goals. Now, based on the relationship between passenger travel and socioeconomic outcomes, for every 1 million foregone passenger, due to airport capacity constraints in 2040, the global air transport industry would support actually 10,500 fewer jobs and 346 million less in GDP in US dollars. So this is for every 1 million foregone passenger, just to keep in mind. Now, following the COVID-19 crisis, investments in infrastructure will be needed more than ever to accelerate the recovery. Governments have a key role to play to support this recovery and to mitigate the risks of falling short on certain SDGs linked to airports and aviation. And here we have 4 of them here on the bottom of your screen with very strong linkages to aviation. So, of course, the economic multiplier, the infrastructure development, climate action, and then in this case, partnerships. Here we're referring to public-private partnerships. Now, let's take a look at climate action. Climate change is a global challenge requiring an urgent global response given the Intergovernmental Panel on Climate Change. So this is the IPCC, and their recent call to reach net zero carbon emissions by 2050. ACI's long-term carbon goal, which was recently released after an exhaustive consultation process with the industry, relates to the carbon emissions under the direct control of airport operators and will be a crucial component of the aviation industry's contribution towards this global effort. ACI has created this ambitious long-term carbon goal to drive further action and support the decarbonization efforts of airports as they respond to the climate challenge for net zero by 2050, but recognizing that each jurisdiction is different and each airport is different, meaning that the speed in reaching net zero will vary considerably from one jurisdiction to the next. Now, let's look at this from an airport investment point of view that aims to reduce the carbon footprint. There are almost 340 airports in the what's called the ACI carbon accreditation program, and over 60 airports that have achieved carbon neutrality. Now, historically speaking, airports that achieve carbon neutrality status invested on average 12% more in capital and take an average of 6.1 years to go from no accreditation to carbon neutrality. Now, we need to distinguish between carbon neutrality and net zero emissions here. Beyond the suite of emission reduction measures, carbon offset credits are used to reach carbon neutrality, whereas net zero makes use of carbon removals or negative emission technologies. Thus the CapEx investment for net zero is more significant. Now, to reduce energy use in new and existing airport buildings, airport operators have access to an array of efficiency measures, and these measures could result in an additional cost premium depending on the measures taken. So if you look at the bottom part of your screen there, and this is drawing on previous studies, the net zero CapEx premium costs could be inferred for both greenfield and brownfield airport terminals. So for a brownfield airport terminal retrofit, which is expensive, we are looking at a net zero CapEx premium of 14 to 19% beyond the LEED or Gold Platinum renovation. For greenfield airport terminals, and this is something where you're starting from scratch, a net zero CapEx premium of 8% as compared to some building standards in advanced economies. Now, I'd like to caveat this CapEx premium for net zero. As mentioned earlier, depending on the circumstance and also the level of government policy stringency of achieving net zero more quickly, wide-scale retrofits and major CapEx investments may not be systematically required other than for asset replacement. And this very much has to do with the hierarchy of emission reduction measures, which you see in the center of your screen here. The electrical grid plays a central role here. It's a key ingredient. In fact, purchased electricity offsite is the single biggest contributor to airport emissions. So the level of electrical grid decarbonization is fundamental here on the pathway to net zero. Other areas relate to efficiency measures. So we're talking here about lighting at an airport. There's also HVAC, heating and cooling, the use of smart controls and artificial intelligence. Also, airports have a huge fleet of vehicles. So moving towards low or zero emission vehicles or EVs, electrical vehicles, will be important here. Now, airports that have achieved net zero or are on the path to achieving it soon, and we have 3 of them listed here, but there are many more, typically have access to renewable energy sources or have access to a highly decarbonized electrical grid. So thus, because the electricity is generated off-site, outside of the hands of airports, and collaborating with governments and other stakeholders will be vital in grid transitioning, as opposed to forcing airports to retrofit their buildings. Now, when we think of government policy for airport decarbonization, because, like I said, the purchased electricity is usually a big piece of the puzzle, right? So governments will have an important role here in terms of incentivizing and supporting the grid transitioning. So this also means access to financing tools, helping to develop renewable energy, and then, of course, further down the road, negative emission technologies. So incentives here, could refer to tax credits or certain types of funding to help with the transition. Now, to recap, we saw the scale of the pandemic's impact on passenger traffic in 2020 and 2021. We examined the pathways to recovery, looking at both the upside and pent-up demand, but also the downside risks that has developed as a result of the transmission of variants. We have seen the industries committed to contributing to goals related to emission reduction and other sustainable development goals. We will be back to a world where we will have a strong demand that will exceed 2019 levels. We're already seeing it in major domestic markets. Now, 2019 is also a world that was characterized by airport bottlenecks, right? So the combination of technology and more efficient use of infrastructure and airspace will be needed. But the investment in brick and mortar infrastructure to close the infrastructure gap will be fundamental here. So closing the gap means reaching certain goals and benefits that are extended well beyond the aviation sector to many segments of the economy and society. So thank you for taking the time to listen, and looking forward to any of your questions.
Thanks, Patrick, and thanks, Felipe, for your introduction as well. We have the opportunity to take questions now, which you can send to us through the chat function. Put as many as we can to the panel. So just going to move to the first question for Felipe, and it's about optimism for recovery. And since our last update, whether you are feeling more optimistic or less optimistic, and what are the things that governments can do to support airports?
Thank you, David, and thank you, Patrick, for the great presentation. Yes, I'm also optimistic by myself, and the last webinar that we did, I was already positive in terms of the recovery, and I'm still very positive with good signs of the recovery that I'm personally seeing in certain airports in different parts of the world. Basically, what I believe that the governments need to work close to the industry to harmonize a little bit the process. The travel is still a little bit complicated in terms of the way that we need to present documentation that is usually different kinds of PLS or passenger location forms for each country, and also the needs to travel in each different countries as well. The change of the regulatory framework, the change of the needs for travel from country A to B are really also a big issue for us, considering that we need to be ready to see any kind of change in the last minute during our travels. And that doesn't help to replace and to bring the passenger confidence back and allow the people to start to flying and started to discuss the opportunities to go to different countries and started to see and enjoy the different opportunities to network, different opportunities to make business, and of course to take some relaxed time.
Thanks, Felipe. And the next question is for both of you. So I'll address that first to Felipe, and then Patrick, maybe you could chime in. What does the current pandemic mean for the economic regulation of airports and the airport-airline relationship? And we hear a lot in the media around airport charges. So what's ACI's position on charges, and how should this unfold?
Thank you, David. That is a really an important topic. As you know, charges is always a topic of discussions between the airlines and governments and airports as well. And what we are seeing that the regulated countries around the world apply certain rules that when the traffic of passengers are doing well, we have some reductions on the charges. And basically, historically, we see some reductions in charges in different parts of the world. Charges, according to the airlines, represent around 4% of their costs. The operational costs, and that includes as well the charges by the air traffic providers. Consider that the airlines receive a good financial support from the governments. We know it's still not enough, considering the long-term crisis that we are facing. We as an airports and other suppliers of the supply chain of the airports didn't receive the same support. And basically, we need that these rules need to be respected. That certain increases will be expected as well to cover the needs of the industry, needs of the airports and the suppliers that work on the aviation ecosystem. That's why basically charges are part of our income. But what we need passengers back, because basically only 21% of the whole income from the airports come from the airlines. The rest of the income come from the passengers and the small other things. But basically, if you don't have the passengers back, we won't be able to recover. That's why we are willing to work together with the industry to find the right way and the right measures to address this. But also, we need to rethink about the regulatory framework. We need to maybe try to find a different approach in the base and less touch approach that will represent that we can consider the negotiations between the airlines and the airports a reality for the future, rather than have a strong regulatory framework that manage the relationship between the airlines and the airports.
And just to add a bit of color around that, I mean, even before the pandemic, there has been an over-application of economic regulation across the globe. So meaning what airports should charge their airline clients. And airports face considerable competitive pressures. They compete for traffic, so they invest in air service development. Hubs compete with hubs, right? So you have the European hubs competing with the Middle Eastern hubs. Right. Airports also compete in their catchment area with other airports, but with also other modes of transport. So that's on the aeronautical side, but we also see competition on the commercial side or the non-aeronautical revenue side. I mean, the retailers, the retail concessions are competing with Amazon and Alibaba. The car parking and the car rentals are competing with the ride-sharing economy. So that's one thing in terms of airport competition. But the other thing is we see significant airline consolidation happening over the decades, right? And this will continue as a result of this. So what do you see? You see this rise of dominant airlines and countervailing power by airlines. So it begs the question, like, why do airports need to be regulated? You could have a market-based solution whereby airports and airlines enter into commercial agreements and they share the risk. right? So why have this intrusive price regulation? And I just wanted to add this point. One thing that, and I think that the world governments would benefit from is the Australian case. They have a very light touch approach, and it's been like that for the last decades. And you've had independent reviews showing that the airports provide increased capital investment, increased customer satisfaction, and there's no abuse of market power because of the countervailing power of airlines. So this is something we need to think about in other jurisdictions.
Thanks, Patrick. Thanks for
that. That is the new reality. Just to follow up on that, David, that is the new reality. We are managed basically by regulations that sometimes comes from the Chicago Convention, that it comes from 1944. And the aviation need to evolve, and I think the crisis brings us some opportunities to do something different and to improve the industry at all, and improve the economic and social development that the industry brings to the communities that we serve.
Perfect, thanks. Sorry for cutting off there slightly. The next question is around collaboration and coordination across the industry, which is a theme that ran through both your presentations. And bringing in the idea of digital passes, health certificates, etc., which have been in the news a lot recently. What's the role that ACI is playing in making sure that this coordination and cooperation occurs?
Thank you, David. Is an interesting question, because as I mentioned before, nowadays you need to fill PLF forms or passenger locator forms for any location that you travel, especially that I'm here traveling in Europe. And I can imagine from a perspective of a frequent traveler, as I consider myself, to a customer that flies once or twice a year, how difficult it is to understand that they need to fill different forms for different countries according with the connections they need to do, and present different kind of documents depends on the location that you are traveling. That's why the kind of harmonization and we need to use the technology on our behalf. That's why we have the Green Pass for that is the European Union is working for. Unfortunately, it's not implemented in many countries as well, but we need to follow that need to be implemented. We have, of course, the Common Pass, we have the IATA Travel Pass and others that can support and can provide an easy way to provide the right information from the governments, maintaining, of course, the importance that is the information from the passenger in the consider as information that cannot be shared as well. That's why use of the health passes, use of these health certificates in digital way will promote and help the aviation to recover, because they will bring a kind of harmonization that the industry needs. And in addition, the passes needs to be interoperable. We cannot have different passes applying in different parts of the world. We believe that the one pass, when they is accepted by one airline or one state, need to be accepted in the other state as well, to reduce the burning use of the time for the agents in checking the documentation, to checking the passes, to checking the vaccination certificates as well. That's why the use of technology will be an ally to us in order to recover the industry, in order to build back better, and also something that you continue for the future as well.
Thanks, Felipe. Unfortunately, that's all the time we have today, and so we can get to everybody's questions. In our next webinar, we'll be making more time for questions and for more discussion. Remember to keep on top of the developments from ACI World on its dedicated COVID-19 news hub. Subscribe to our press releases and updates from our ACI Insights blog, and by following us on Twitter, LinkedIn, and Facebook. Thank you for joining us today. We look forward to supporting the industry as recovery continues, and as an industry, we're always stronger together. So thank you.